Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. Today is Wednesday, October 19th. I'm intern Barrett, joined by Ben Nye. How you doing this morning?
Doing well. I'm glad you used your correct name this time.
Yeah, intern Barrett. Can't go with the G, gotta stick with the B. Let us know what's going on in markets this morning with the futures.
Yeah, so it's a pretty quiet day. We have S&P up 4 basis points, NASDAQ down 9 basis points. Gold, decent day, up $9, $12.72 an ounce. Oil up 80 cents, probably the mover of the morning with API data out last night. Pretty bullish. That's up 80 cents to 51.09. Important on oil though. So on Tuesdays they always come out with the API data, American Petroleum Institute data, in the evening on the East Coast. Obviously when I was working on the West Coast, it came out at like 1:30, so it wasn't so bad. But here it's at 4:30 around the end of the day, after the commodities markets are closed. And so you see that having a positive effect today. The DOE, Department of Energy number, comes out on Wednesday morning at 8:30. So keep an eye out on for that. Actually, I think it might be 10:30. Keep an eye out for that because sometimes that diverges from API a little bit. And so you might see this big move on API data when they say supply is down, demand is up. If DOE comes out and say actually inventories are up, then you might see that uptrend reverse. So a little bit of risk going into that DOE data.
So big drivers for oil price.
Yeah, and they fluctuate so much because inventory goes up and inventory comes down, and usually, oftentimes you'll see like there's a 3 million barrel draw one week, and then so analysts get really bullish on oil, and they forecast a 3 million barrel draw the next week, and then it's 3 million barrel build. So it kind of goes back and forth.
So volatile information with
volatile information,
volatile oil
like
price.
when you look at it over long term, it has more of a trend. But on the week to week data, don't put too much weight into it, but it does move markets on a day to day basis. So that's oil, and then bonds. Not much happening in the bond market. 2 years flat at 1 basis points, 10-year flat at $1 at 1.75, 30-year flat at 2.52. 30-year obviously up from the lows. It was at 2.30 not too long ago, but still incredibly low.
Yeah.
I imagine lending your money to somebody and saying, okay, all I want is $2.50. I'm going to give you $100. All I want is $2.50 a year, and then at the end of 30 years, you have to give me my money back.
Yeah, not somewhere I'm looking to park the majority of my money anytime soon.
No, I would say not. We do have some movers in the market though, reporting earnings. Not as big a day earnings-wise as yesterday, but still some big movers. So one of them that's pretty interesting to us is Halliburton. So I know we talked a little bit about Halliburton. Halliburton's an energy service company. They came out with earnings this morning. So they provide, ways that you can produce onshore energy, and they also are involved in offshore rigs. They provide a lot of the drilling apparatus for that. Historically, they've done quite well when energy's building. Have these wildcat drillers just drill.
When it's expanding.
Exactly. When cost of capital is low. So one of the big things that sometimes people miss about, why did we have the big energy boom? Why did we have the big energy collapse? One of the big drivers of that is just the extremely low cost of capital, not only on the debt side, but also on the equity side. People were convinced that, this American energy boom meant that anyone could go out in their backyard, drill a well, and hit oil, and sell it for $100 a barrel.
It sounds pretty good to me.
It sounds really good, and it sounded good to a lot of investors. The problem is, everyone started drilling. Halliburton was, hiring employees, and then they reached a point where oil fell, and all of a sudden, none of these places were profitable. All these wildcat drillers were not profitable anymore, so they had to cut back drilling. And for that reason, Halliburton really
Loses-
fell off.
Yeah, loses customers, I
And
guess.
so not only do you lose volume, but if all of a sudden you're left with a surplus of supply and reduced demand, what happens to price?
It falls.
It falls. So Halliburton's dealing with lower pricing, lower volume, so really difficult for this space. So Halliburton, Schlumberger, all having a bit of a difficult time.
Very dependent on the overall industry, I suppose.
Indeed. So then what happens when oil prices rise, energy prices rise, they bounce off that low of what, $27 an hour, $27 a barrel, and then almost double now, $51 a barrel, as we see this morning. So what happens to energy services companies? Although the rig count is not, it's stabilizing, it's declining at a lower rate, you see people try to get ahead of it. So they're buying the energy producers and they buy the energy services companies because they have so much leverage to energy production.
Right.
So you've seen Halliburton stock rise year to date. And indeed, their results this morning, they're rising another 1% in pre-market trading. Kind of going into a bit of the results, they missed on revenue, which, you know, it's not really surprising.
It's still tailing off of
It's still tailing off. I mean, analysts should be able to predict that.
Mm-hmm.
But just when you have a really volatile earnings structure and really volatile revenue stream, it's not surprising to see earnings miss by much. There's an inherent conservatism bias on the sell side, and it really in analyst talk in general. There's just a bias, well, it can't fall that much.
Yeah.
You say, well, I'm not going to be crazy about it. But oftentimes when energy prices do get crazy and the market is volatile, you know, that sometimes that extra slug down just happens.
Mm-hmm.
So Halliburton posted revenue of $3.83 billion. Estimate was $3.91 billion.
Ooh.
So they missed by somewhat, but as we talked about, you know, it's not a huge deal because you kind of expect Halliburton to miss in a market like this. In fact, North America revenue was actually in line with expectations, $1.7 billion. Latin America was really impressive actually. They were basically flat versus analyst expectations, $415 million versus an estimate of $408 million. So that's really impressive to me because Latin America has been so bad for so long, and the drilling that occurs in Latin America is primarily offshore.
Mm.
Offshore drilling is more expensive than even onshore fracking. So good result in Latin America, still down 13% sequentially though.
Yeah.
So it's still absolutely terrible environment,
Yeah.
but they did beat analyst expectations there. Europe, Africa, and the CIS countries, again, down sequentially, but missed at analyst expectations somewhat. And Middle East and Asia was flat with analyst expectations. So Halliburton revenue actually, for all the problems that it's going through, posted results that were reasonably close to expectations, and you're seeing a little bit of a, you know, maybe things aren't that bad. Maybe if I just throw a dart against the wall with Halliburton here, I'm not going to get killed by it, and there's an optionality component to it.
Right.
So by that I mean, if Halliburton just continues to, you know, muddle through, then the downside, based on these results, isn't that great. And if energy prices continue higher, then you're looking at some more upside potential.
Good fourth quarter, potentially.
Fourth quarter is always tough for them because what happens in a slow energy market is that people start to, you know, if you're an energy producer, so Garrett, you're an energy producer, you own all these fields, people want to take time off, and you say, okay, well, you know, we made it through the year, you know, we don't really, it wouldn't be such a bad thing if we reduced production a bit and stimulated price. So, you know, we'll give you a little extra time off over the winter holidays. So that's sometimes what you tend to see. You also see in Canada that's a big issue in Canada when they have the weather coming in. It's like, we're not going to have these people coming out working when we're barely making any money per barrel. We'd much rather just like give them the time off. They'd be happier we'd be happy because we're reducing demand and we're not making much money as it is anyway. So that's kind of the thinking that goes on there. And Halliburton is cautious around the fourth quarter. And they even cite those same things. They cite holiday and seasonal weather-related downtimes. Last point on Halliburton is that they are maintaining their long-term optimistic view of Latin America. I mean, I don't know what it'll take for them to change that.
Right.
I mean, everyone says, oh, it's a population, they have a large resource, so it has to happen
They're
at some
emerging,
point. But you don't see, until you really see definitive moves, I mean, down 13% quarter over quarter, annualize that, and you're looking at big down. And that's not good for anyone. So that's about it on Halliburton. So I would say, for us, if we were to take a shot on this, to my understanding, I don't think we own any Halliburton at the present time. But if we were to, it would likely be a small position, almost a call type option position. We wouldn't buy calls, but we would size it so that the downside would be reduced in the case that energy prices fell or Halliburton just completely blew up.
So we wouldn't be completely in it for the.
Yeah, you never want those big capital haircuts.
Right.
That's really tough if you just take a 2% haircut on the portfolio. That's tough to come back from,
Yeah.
and it can create bad risk-taking behavior in the firm. So it's nice to have a more to keep losses minimized.
Right.
If only just to keep yourself consistent from a mental perspective.
Right. All right, we're going to have Krebsbach come up to talk about Intel and some other earnings.
All right, everybody. I brought up Matt Krebsbach, the unit, here to do a little more of a deep dive into some more earnings. We're going to talk a little bit about Intel, and we're going to preview Textron tomorrow. And then we also wanted to hit on Salesforce.com. There was a big Wall Street Journal piece today. They leaked a May 2016 presentation that was an internal presentation, and in it they had acquisition targets. Among them, not Twitter, but we'll get to that. We'll get to that in a little bit. First, I wanted to hit on Intel because they reported earnings last night. They actually guided up a few weeks ago. So when the company guides up, they come out 2-3 weeks before usually. If they're really confident, they might come out about a month before. And then they're really having a great quarter. So Intel came out, they guided up. Micron, which makes memory controllers, and DRAM, they came out and had very good earnings. I think Seagate came out with reasonably solid earnings as well. So then finally Intel's now wrapping up the show. They started the show, now they're kind of wrapping it up. And they didn't have as great things to say this time around.
I thought it was really interesting how they guided up. Like you said, they gave like pre-earnings, and then like they did this. And I think the outlook was poor for fourth quarter, correct?
Yeah, exactly. So
that's kind of.
So Intel, I mean, they beat in the quarter, which you would expect. If they didn't beat after issuing guidance, that would be really bad.
Yeah, that would be an issue.
That would be like us saying. That would be like Krebs saying he's going to win college football picks, and
I wouldn't say that.
And he's going 50-50, and I'm 65-35. So
Yeah,
just saying. But so Intel came out, and this time around they really reset expectations for Q4. So their thing is that the data center, so they have personal computing and data center computing. Data center actually had a great quarter. It was up 8% on a year-over-year basis. Client compute was up 2%. Internet of Things up 21%. So really good from that standpoint. The margins on the data center are the most accretive for the business. 50% margins in the data center business. So when that does well, it has a salutary effect on the entire company. So when they're saying data center growth is expected to be not so strong in Q4, that's kind of a warning sign not only for revenue but also for margins.
right.
So what are your big picture feelings on Intel and the valuation and kind of the outlook going forward?
Well, like they're trading down like 5%, correct?
Yeah.
Still?
Yeah.
That hasn't changed?
Yeah, it was 4 or 5%.
When they pre-announced those earnings a couple weeks ago, I trimmed Intel on a couple of the accounts that I had run. I mean, I just thought it got kind of lofty at like $38 or whatever it was. I think I wouldn't be adding it here after that fall off. I think there's still, like it's still kind of like a difficult space to operate in. I'd probably wait till like lower 30s in terms of action points.
Yeah, and I would agree with you. In fact, I came out with a pitch just in our PM
I was going to
meeting.
say, did this change your pitch at all?
It doesn't really, because my view was that Intel gross margins are at about the high end of what you can expect them to be.
With companies like Intel and IBM, like gross margins, like all people care about too.
All people
That's
care
really
about.
all
I mean, I think so the guidance here, kind of going into the numbers a bit. Revenue, the midpoint they said was 15.7 billion. Street expectations was 15.9 billion. Gross margins was 63%, or thereabouts. Estimate was 62.7%. But I wonder if the kind of the whisper number on the gross margin was higher than that. So you have the street sell side expectations, but then you also have what people, when people start to really get hopeful about a stock, they have internal expectations that are higher than the street. And I think that's what kind of did them in this time. Talking about China enterprise PCs are better than expected. Consumer PCs are better but still not strong. And I think there's going to be a little bit of an inventory reduction in Q4.
And you're going to see that, I'm sure you're going to see that fall through to like HBQ with all the like computers and stuff. I kind of like HBQ, but
it's an interesting company for sure.
it's kind of like a counter play. I mean, it's pretty,
Yeah.
I mean, feel like it very much.
No, indeed, and I think there's been there's so many adjustments in this business. I feel like when you look at any of these value plays that trade at relatively low multiple of earnings in the tech space, you really have to dive down and say, okay, well, how much is actually restructuring that they were just stripping out that occurs every single quarter, or how much is coming from acquisitions? So fundamental growth in PCs, gut instinct, like what do you say the core growth is in PCs?
Core growth in PCs.
I guess is it positive or is it negative? I think there's a lot of people would say it's negative.
I think it's probably currently negative. I can see it turning around relatively quick. I just get that feeling.
Do you
that, like as people like they're gonna spend more on like better computers and everything? I mean, I still think a computer has a lifeline of like 4 years. I think that's just like how it is.
When was the last time you bought a PC?
A couple months ago, I bought a laptop.
Nice. Barrett, what about you?
4 years ago.
You're due.
Yeah, you're due.
Mine's still running
upgrade.
strong.
Yeah, so Intel, what do you think about their strategy to continue to make, to shrink the size of the die and, spend all this money on CapEx in order to improve performance? Do you think
I kind of think you have to.
But yeah, see, that's kind of my gut. But then on the other hand, it almost seems like performance is good enough. Like, what more can a PC do that it doesn't already do?
Maybe. Do you think there could be like someone else that would be spending there, and then all of a sudden you're like, oh, well, now we're in second place. Now we're screwed.
That's a fair point. But
But
I
maybe
mean,
they they're just forced to
Yeah.
do that to just maintain constant
Right.
constant minor improvements.
yeah, big thing when you're looking at Intel is just how much CapEx they're spending.
And it's not just Intel, like everyone in that space.
Everyone in that
like
space.
Micron, just because we
Yeah.
talk about Micron, like their CapEx is just
It's incredible.
absurd.
It's incredible. Okay, well that's Intel. So you would not be a buyer here at this point.
Not yet.
On the dip. Neither would I. I'd wait until kind of like you, lower 30s. Next on the agenda, let's talk about a little bit about Salesforce. I know this is going a little bit out of order. So the Harvard MBAs out there who say 1, 2, 3, and then hit 1, 2, 3, they wouldn't really be happy about me going 1, 3, 2. But let's talk about Salesforce. Big article in Wall Street Journal, as we said before, coming out with a leaked slide deck from Salesforce.com telling us what acquisition Salesforce is looking at and even what companies Salesforce could sell themselves to. So really interesting because
do you look into Salesforce at all? This being leaked, like that's not very good internal controls there.
Extremely poor internal controls. I mean, this is a company, Salesforce.com. Taking a step back, is a customer relationship management tool. In fact, their ticker symbol is CRM. So when you think about a customer relationship management tool, probably item one is security. You don't want we wouldn't want our clients, we don't use Salesforce.com, full disclosure. But if we did, we would not want our client information leaked. So like the fact that they're leaking this is not a great, and is kind of an indictment on their internal controls, as you say. Anything that sticks out to you, Barrett has this up on the screen here. You know, you have LinkedIn, which we knew they were interested in. They had that bidding war with Microsoft. Workday, expensive company, competes with Oracle in that space. What was interesting to me on here was that there had it kind of ran the gamut. So on one hand you have Adobe, which is a more established company.
Right.
And then you have Marketo, which is a startup kind of like, similar to RetailMeNot. It's kind of a couponing site, kind of marketing business. But also the metrics that they look at.
Yeah, that was really interesting to me, what they put on here actually to evaluate these.
Right.
That's really interesting.
So what sticks out to you?
The Glassdoor CEO rating, and we recommend. I'm pretty surprised that was on there. Like I don't actually value that.
Right. It's like, are you going to make an acqui-hire of something? It's like, I mean, I would not buy Marketo if that was the 69% CEO rating. And LinkedIn was, interestingly, LinkedIn was the one that they made an offer on, 98% CEO rating, because he's just made LinkedIn into a juggernaut profit powerhouse. Not really, but
this status line at the bottom is really interesting too.
Yeah.
So it only looks like there's 4 that are in play, right?
Right.
I don't know much about those 4. I don't know if you do.
Yeah. Well, the Pega,
and Marketo,
the Pegatron meeting in June. That's kind of interesting that this is actually a working document. It's interesting that they even have nicknames for them.
Yeah,
they have code names. So LinkedIn was Project Burgundy. I'm not sure how they got that name. The Project Champagne. I wonder how they came up with that name. It's like, you know, maybe they were just over like having a little dinner, company dinner. They were just throwing around ideas. They say, you know, we have this really, really highly valued stock. What can we buy? And they have this kind of drinking game, and they just throw out these different wines, and then they just throw out champagne. So
it's kind of interesting they put NetSuite on here. I think that's a really long stretch of Larry Ellison owning.
Yeah.
I think that's really unlikely.
And Larry Ellison does not like any other company other than Oracle.
Yeah.
You listen to Larry Ellison's conference calls, and it's like, we're beating Workday, we're beating Adobe, we're beating Microsoft, we're beating all these guys. So for them to take that out would be pretty interesting.
What about Twitter? Are you surprised Twitter's not on here?
I'm surprised Twitter's not on here.
Do you think that just like sprung up? I don't know, like, oh, Twitter, man.
Recode actually came out with an article. It was pretty underreported, but they said that Twitter actually came to Salesforce. And Salesforce fielded the call and said, well, we'll look at it.
Right.
And that was
like
the extent of their
proper
interest.
business practice, you know.
Right,
Like if there's
exactly.
a good deal, you know, hear it out.
So, yeah, Salesforce, Twitter not on here, which was kind of interesting. Let's look at the acquisition targets that they named this slide interlopers. Presumably, this is who's going to acquire them, because I'm pretty sure they're not going to go out and buy Apple anytime soon. I don't know how they would manage that acquisition. Interesting, Baidu's on here. We talked a little bit about them last week.
Just one more thing on this, coming back to this.
Yeah.
It's kind of surprising to me, like, how simple this is, like, I'm sure this is, like, upper management using this.
Mm-hmm.
I feel like there had to be a lot more going on.
I would hope so.
Right?
I would hope so.
I'm sure we just got, like, the...
Imagine if that's how we made investment decisions at Normal. You know, the CEO rating at Glassdoor is 99%, so we have to buy them.
$20 billion. That's their offer.
$20 billion, leveraging up. We'll make an all-stock, we'll make half stock, half debt.
All right, so sorry, you can get on to the interlopers.
Yeah, so interlopers, Amazon's CEO rating, only 81%.
That was pretty surprising. You always hear great things about Jeff
Yeah.
Bezos.
He's losing big time to Tim Cook right now, and both of them are losing to Mark Zuckerberg. But take a look at IBM.
Yeah, I know. I thought IBM was like one of for some reason I pegged them as like one of the more likely people to buy Salesforce here.
Mm-hmm.
And then I was like, oh man, those numbers aren't that great.
Because we know this is how they make their decisions.
That's no chance on that one.
So CEO rating at Miss Ginny Rometty, 56% CEO rating. Oracle, 72%. Larry Ellison, not too popular. They're getting too much plastic surgery and not enough actual, and too much time on his yacht, I guess. So this is how, I guess,
Well,
people in Silicon Valley.
which ones here do you think? Let's have you pick two that you think would be if Salesforce to get bought out. Who would you have getting bought? That happened.
I think Hewlett Packard might be an interesting one. But I think the two most likely would be IBM and Microsoft.
You're on the IBM train? Nice.
Yeah, I think IBM's been so acquisitive.
Right,
and same with Microsoft. I don't think Apple or Google or Facebook or Amazon would go out and buy Salesforce because they think they can do it all themselves.
I think Baidu kind of wants to get in that space, so I don't think they're big enough to really do that.
Right.
That'd be like a merger more than a buy.
Yeah.
I doubt Facebook would do that either.
SAP is interesting as well. Maybe some integration with the tools that SAP already offers. But it seems like Salesforce would want to be bought by someone who has a little more cachet and a little more exciting Silicon Valley story.
Do you think they'd sell to Alibaba? Do you think that's a possibility?
I think it would be really tough.
They're trying to get in the big cloud.
I think it would be really tough, and the primary reason I say that is because for a Chinese company to buy an American company that has so much client data,
right?
I think that would be really difficult to get, one, by regulators, and two, by stockholders.
Yeah.
I think they would much rather be bought by an American company.
Yeah, I completely agree.
Instead. Anything else on this that you have?
No. Same with I guess same deal probably with Tencent.
Yeah, it's interesting that so many Chinese companies are on this list. So let's talk a little bit. Moving on to number 2 on our preview. Number 3 now in order of which we've discussed. Textron.
Mm-hmm.
You came out and talked about this stock a couple weeks ago. You said hold off for now.
Mm-hmm.
Tell us a little bit about the stock, a little bit about the company, and why you'd hold off until you see more evidence.
I guess the simplest way to describe Textron, their products, they do business jets. That's kind of like one of their main MO, one of their main segments. So they do Cessna and Beechcraft.
Mm-hmm.
I think in that space, the only other real main competitor is Gulfstream, which General Dynamics owns, which we own too. But General Dynamics is way more diversified than just business jets and helicopters. And then Textron also does Bell helicopters, which are mostly commercial, and some military-related stuff, and a couple other drones and stuff like that. I'm trying to hold off because of Honeywell's warning. I think they pre-announced, right?
They did, yeah.
A couple weeks, or a week or two ago. And the big knockdown on that pre-announce was the biz jet market, because they sell a lot into the biz jet market. Mm-hmm. And I think that they traded down 3 or 4% that day, and I'm just trying to be more, greedy, I guess.
Right. And I presume that Textron has much more leverage to that market than Honeywell, because Honeywell's business is so much more diversified.
And that market is it's still challenged. I think analyst feeling like consensus is like 2017 is going to be like another moderate year. And I think you're not going to see like that biz jet scene where you saw like in the early 2000s where like all these companies are buying jets left and right. I think, don't quote me on these numbers, but let's say like 400 biz jets were sold in 2005, and now they're down to 250. Like that market is. It's just a tougher space than what it was before.
So if you had to put Textron as a place in its own cycle, its own internal cycle, would you say they're on? Would you say they're in the trough, or they're still on the way down to the trough, or trough? Still on the way down to the trough, or have they?
I think they're
bottomed yet?
I think they're nearing the bottom, but I mean, if you get in a recession, that changes everything.
Right.
You know, like I think in its own market, I think it's way closer to the bottom than a peak for sure. I'll say they're coming out of it.
Does this do better when Donald Trump's elected and everyone wants their own private jet and private plane, even if it's just a Cessna 152?
What if Trump just buys like 50?
Yeah, maybe he just has his own fleet.
Yeah, his own fleet.
Maybe like Melania's flying a 152 out of the White House, out of the Rose Garden.
Yeah. Well, in like that, I don't know if you classify it as a defense company. It kind of is. Like they do some, but in that defense space, let's just call it that. A lot of those companies are really overvalued, or not overvalued, but like
Rich,
fully valued, let's say. I don't think that's the case with Textron, maybe because they're not as diversified and they're more levered to commercial stuff. But I also think they don't pay dividend. I think it's like 0.03%. I think it's just one of those token ones. They're not buying that much shares back either, like all these other companies are, and all those other defense companies also have like a 2% dividend. They've been focusing on righting the ship, getting the company proper, paying off debt. And I think going forward, barring a recession, I think you could see increased buybacks, dividend raise. I think they have a lot of leverage to like increase their stock price going forward.
So you think that the free cash flow, when the cycle turns, that free cash flow will really, that machine will start to turn on.
And it's not like it's bad right now either. Like I don't know what their yield is specifically right now offhand, but it's not. It's like pretty substantial.
Well, you heard it here. Textron reports tomorrow morning, so keep an eye on that.
Yeah, I'll follow up with that.
Yeah, we'll have a good follow-up tomorrow, and we're also talking about the presidential debate tomorrow.
Yeah.
It should be a great episode. Andrew will be back, probably bringing Sam and the interns as well. So maybe you'll want to skip over that piece. But definitely come back, hit subscribe, follow us on Twitter. Matt's going to be talking about Textron a little more, and we'll also probably have a little bit more follow-up on more earnings results tomorrow. Catch you later.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.